Introducing F.A.S.T graphs, a powerful fundamental analyzer software tool that makes researching stocks easier, deeper, and faster than ever before. F.A.S.T graphs can tell you all you need to know about a stock in an instant, and F.A.S.T graphs can do this for you on over 16,000 symbols. If the company you are reviewing is a great growth stock, F.A.S.T graphs will bring its greatness to life. For example, looking at HDFC Bank Limited, you can see a company whose earnings growth has been exemplary over the years. Year after year, the company's earnings have increased, with one slight hiccup in 2008. Medco Health Solutions, another example of a stock whose earnings have grown consistently year after year at over 22% a year since it went public in calendar year 2003. Copart, another example of a company that since 1997 has seen earnings growth increase year after year after year, with only modest volatility along the way, averaging over 20.1% growth. But just as it's easy to see a great growth stock with F.A.S.T graphs, it's also easy to see a very cyclical stock with F.A.S.T graphs. Here's an example of Alcoa again. You can see a lot of cyclicality. So if you're looking at a cyclical stock, F.A.S.T graphs vividly exposes it. In addition to cyclical stocks, F.A.S.T graphs will also show you what happens when a company's earnings continue to falter year after year, like they have with Eastman Kodak since 1997. Both earnings and ultimately stock price have fallen during that time frame. But not only does F.A.S.T graphs show you the important price relationship to fundamentals, mostly earnings, F.A.S.T graphs also can help you make smarter buy and sell decisions by exposing overvaluation or undervaluation when it exists. For example, in Cerner, you can see that the black price line was above the earnings justified valuation line, which is the blue and orange line coinciding here. And you can see overvaluation, you can see periods of undervaluation. Obviously, the bad time to buy this stock would be when it was highly valued, and the best times to buy this stock would be when it was fairly valued. Or as the case with a great growth stock like Cognizant Technologies, whose price and earnings tracked each other very closely until the recession caused the price to drop even though earnings continued to rise. The opportunity of undervaluation becomes clearly evident thanks to F.A.S.T graphs. So thanks to F.A.S.T graphs, when a stock is fairly priced, it's very clearly evident. When a stock is overpriced, that's evident as well. And if a stock becomes underpriced, F.A.S.T graphs helps you see that also, therefore empowering you to make better and smarter buy, sell, or hold decisions. One of the most useful features of the F.A.S.T graph research tool is the ability to quickly determine if growth is accelerating, decelerating, or staying the same on any company you're researching. For example, here's a 20-year graph on Microsoft, and you can see earnings per share has grown at 21.6% since calendar year 1992. But if we cut 5 years off of that and look at only the last 15 years, we'll see that the earnings growth has fallen to 18%. Take another 5 years off and draw this as a 10-year chart, and instantly you can see the earnings growth has fallen to 13.5%. And then finally, if you draw just the last 5 years, you can see that earnings growth has kind of stabilized at around 14.9%. So with F.A.S.T graphs, you can rapidly and quickly and easily determine if growth is accelerating, decelerating. When you draw a F.A.S.T graph, the tool automatically calculates the performance associated with whatever stock you drew. For example, with a fast-growing company like Cognizant Technology, who's grown earnings at 53.7% and is slightly undervalued today, shareholders still were able to earn a 47% rate of return. $100,000 in Cognizant Technologies 14 years ago would have grown to over $14 million today, in contrast to the same $100,000 in the S&P only growing to $115,000. On the other hand, if you look at a slow-growing utility stock like Scana Corporation, who grew earnings at 2.9% but does pay a dividend — dividends are the light blue shaded area on the F.A.S.T graphs — you can see that shareholders earned a rate of return that was consistent with their earnings growth. They averaged a 3% compounded rate of return. However, since they did get dividends, they did get a dividend income stream over that time frame, and their rate of return increased up to 6%. But you can see the relationship between earnings and stock price. If you look at a company like Walmart that was reasonably valued, even though it went excessively overvalued during the irrational exuberant period, and then its price went flat for many years, when you factor that it grew earnings at 13.8%, you will see that over that time frame, with all the ups and downs, shareholders earned 11.5%. But once again, F.A.S.T graphs automatically calculates dividends and shows you the impact that dividend has on your holdings. And then to summarize, you look at a company like Express Scripts, who grew earnings at over 32% per year. You find that the shareholders earned 31.7, or almost an identical rate of return as the earnings growth or the fundamentals of the company indicated. The F.A.S.T research tool also provides a subscriber with very convenient estimated earnings and return calculator that is based on the consensus of leading analysts that are following a stock. It calculates their 5-year estimated growth rate. In the case of Express Scripts here, we're looking at 18.1%. If the company grew at that rate and traded at a PEG ratio PE, it would average a 16.2% compounded rate of return. It also provides an earnings yield estimator, which shows what your current earnings yield and what you can expect your earnings yield to grow by based on the consensus of analysts. The F.A.S.T research tool captures volumes of essential fundamental data at a glance to include the company's current price, its PE ratio, dividend yield, if any, the rate of earnings growth for whatever period you're measuring, a normal PE ratio that the market has capitalized the company's market cap, a snapshot of the balance sheet, and it also provides essential fundamentals like price to sales. Also, it shows the relationship of interest rates and price earnings ratios. It allows you to overlay things like operating cash flows and free cash flows onto any graph as well. In addition to all this, the subscriber gets a powerful screening function where they can search the database of over 16,000 companies and input whatever they're looking for in terms of growth rates, dividend yields. They can manipulate the portfolio review list that is created by total return, alphabetical order, dividend yield. Managing your portfolio has never been easier than it is with F.A.S.T graphs. Not only can you create portfolios, but you can also mark each holding in your portfolio with a green dot for buys, a red dot for sales. Once you've created your portfolio and input the current buys and sells under the Edit Buy and Sells button, you can put the dates and the prices and the number of shares and so on of when you bought a stock. Once that's complete, you can click the Graph button, and that will bring up the company in your portfolio. And then you can see with a green dot anywhere that you purchased the stock. It tells you how many shares you bought, the date you bought it, and the price you paid, and then any sales that you made on the stock. And it also summarizes those buys and sells for you so that you can have more transparency in managing your portfolio than ever before. In a nutshell, F.A.S.T graphs helps the investor more easily and efficiently answer their 3 most important questions they can ask: what to invest in, when to invest, and when to sell. Subscribe today. As an investor, you have everything to gain and nothing to lose. You can take a 14-day free trial to see if F.A.S.T graphs is the right research tool for you.